Hello, I'm Isabella, and today I want to take you on a journey into the future of money, exploring how central bank digital currencies and other digital assets are reshaping the way we store, send, and spend value. Imagine a world where you can transfer funds across borders in seconds with near zero fees, or where your digital wallet is as secure and trusted as the notes in your pocket. That world is closer than you think, and I'm here to share with you the innovations, the challenges, and the real opportunities that CBDCs and digital currencies offer for our everyday lives. Let us begin by understanding what a central bank digital currency, or CBDC, really is. At its core, a CBDC is a digital form of a country's fiat currency, issued and backed by the central bank itself. Unlike cryptocurrencies that rely on decentralized networks and volatile market dynamics, CBDCs carry the full faith and credit of the issuing government, making them a stable and regulated medium of exchange. Countries from China to Sweden, from the Bahamas to the European Union, are already piloting or rolling out their own digital currencies, each with unique design choices that reflect their economic priorities and technological capabilities. One of the most compelling reasons behind the CBDC movement is financial inclusion. Today, billions of people around the globe lack access to basic banking services, often because traditional banking infrastructure is too costly or geographically remote. A digital currency accessible through a mobile phone can bring financial services to unbanked populations, enabling them to receive wages, save securely, and participate in the digital economy. Imagine a parent in a rural village receiving remittances instantly from a child working abroad without paying exorbitant remittance fees. That is the power of a well-implemented CBDC. Security and privacy are at the heart of any discussion about digital currencies. Central banks must balance the need to prevent illicit activities like money laundering or terrorism financing with the public's expectation of privacy. Some CBDC designs use advanced cryptography and permissioned blockchains to ensure transaction data is protected, while still allowing authorized authorities to trace suspicious flows. Other proposals involve offline capabilities, enabling payments without internet access, which could be revolutionary during natural disasters or in areas with unreliable connectivity. The technical architecture you see behind each pilot project is a testament to the ingenuity of financial engineers striving to create systems that are both robust and user-friendly. Interoperability is another crucial element. For digital currencies to reach their full potential, they need to work seamlessly across borders and across different platforms. Initiatives like Project mBridge, led by several central banks in Asia, are already testing multi-CBDC platforms that allow instant settlement between participating currencies. This could dramatically reduce settlement times for international trade and cross-border payments, lowering costs for businesses and consumers alike. Picture a small exporter in Singapore receiving payment from a buyer in Mexico within seconds, without going through multiple correspondent banks or paying steep conversion fees. While we are excited about CBDCs, we cannot ignore the continued rise of private digital currencies and stablecoins. Issued by companies and backed by reserves of fiat currency or other assets, stablecoins like USD Coin or Tether offer a bridge between the traditional financial system and the blockchain world. They enable decentralized finance applications, or DeFi, where users can lend, borrow, and earn yield on their holdings. Central banks are watching these developments closely because stablecoins could alter the monetary landscape if they reach mass adoption. As regulators craft frameworks to oversee private digital currencies, they strive to foster innovation while protecting consumers from risks like reserve mismanagement or sudden depegging. One emerging concept is the digital identity wallet. As regulators and technologists collaborate, digital identity solutions can be embedded into CBDC wallets, allowing users to prove who they are without exposing unnecessary personal data. Imagine paying for your morning coffee by simply scanning a QR code with the transaction validated by your digital identity, but without revealing your home address or phone number. This convergence of digital currency and identity verification could streamline everyday interactions, from online shopping to government services, all while preserving user privacy. Of course, the transition to a digital currency ecosystem will not happen overnight. Central banks must update legacy infrastructure, banks and payment service providers need to integrate CBDC rails, and merchants must adopt new point-of-sale systems. Consumer education is essential. People need to feel confident that their digital wallet is as secure and reliable as their traditional bank account. In many pilot projects, central banks are engaging directly with communities, hosting workshops, and distributing informational materials. This grassroots approach ensures that when a CBDC goes live, it is not just a technological novelty, but a tool that enhances daily life. The question of monetary policy also takes on new dimensions. With programmable money, transactions that execute automatically when certain conditions are met, central banks could implement targeted stimulus or savings incentives. For example, a government could issue digital vouchers that expire if not used on specific types of goods, or incentivize consumers to save by offering higher yields on funds locked in for longer periods. These tools could help manage economic cycles more precisely, but they also raise important ethical and governance questions about how programmable money is used and who decides the rules. Another fascinating frontier is the integration of CBDCs with the Internet of Things. As more devices become connected, from smart refrigerators to electric vehicle chargers, they may transact autonomously. Your car could pay for charging based on real-time electricity prices, or your household appliances could reorder groceries when supplies run low, paying directly from your digital wallet. This machine-to-machine economy relies on digital currencies for trustless and secure microtransactions, opening new business models that combine finance and automation. Environmental sustainability is also part of the conversation. Traditional cryptocurrencies are often criticized for high energy consumption. CBDCs and many stablecoins typically use less energy-intensive consensus mechanisms, reducing their carbon footprint. Some central banks are even exploring green CBDCs, where certain transactions, like those supporting renewable energy projects, are incentivized through reduced fees or carbon credits. This alignment of digital finance and environmental goals points to a future where money itself can help drive sustainability. As we look ahead, collaboration between public and private sectors will be key. Technology companies, fintech startups, and academia bring innovative ideas and rapid development cycles, while central banks provide regulatory oversight and monetary stability. Sandbox environments and international working groups foster knowledge sharing and harmonization of standards. The collective goal is to ensure that digital currencies enhance efficiency, financial inclusion, and security without compromising the integrity of the financial system. In closing, the future of money is digital, programmable, and inclusive. CBDCs and complementary digital currencies offer a path to faster, cheaper, and more secure transactions, empowering individuals and businesses around the world. We stand at the threshold of a new financial era where your digital wallet is not just a storage of value, but a gateway to a rich ecosystem of services and innovations. Embrace the possibilities, stay informed about pilot programs and regulatory developments in your region, and consider how digital currencies can enhance your own financial life. If you found this exploration of central bank digital currencies and digital assets insightful, be sure to watch the full video on the channel for deeper case studies, live demos, and expert interviews. Don't forget to subscribe, hit the bell icon, and join our community as we navigate the exciting evolution of money together. Thank you for listening, and I'll see you in the next video.